What's up, Periscope? Welcome to our live stream today. So today what we're going to be doing is we're going to be jumping back in and talking more about business credit building. Specifically, we're going to be doing some reviews of business credit reports. I want to show you exactly what's on business credit reports, why you should care about your business credit reports, and even pull some business credit reports right here. What's up, Pretty Washington? What's up, LT Works 2016? All is well here. So what we're going to do is we're going to dive in. We're going to look at some real business credit reports, and then we're going to start the process of segueing back into business credit. You're pulling mine, Pretty Washington? Absolutely. We'll pull yours. We're going to pull at least a handful or more reports today and actually review these with you in real time. So here's the deal. Here's the rules. There are no rules. Been a minute. Glad to be here. Good. I'm welcome. I'm glad you're here. Yay. All right. So let's go. Let's jump in here. So let's start with one at a time. And what we're going to do is I need your business name, and I need the city and state that your business is in. And then what I'm going to do is I'm going to come in here. We're going to pull your Experian report. What's up, Christine? Welcome. And then we're going to go through it with you. I'm going to show you what's on your report. And again, we'll probably do 5, 10 of these, something to that effect. And from that point, let me see. Prosperous. Okay. LS. And you might have to type this in 2 times. ERITUS. ITUS. Do that for Prosperous Solutions. Do me a favor, type in that information one more time. And I hate to make you guys do that, but the problem is that Periscope, the way it works is your comments go away quickly. So unfortunately, sometimes I might have to have you type it in twice. So I'm going to do Prosperous Solutions, if you don't mind. Type that in first. Wait, hold on, Image Solutions. Don't do that. Let me just get Prosperous Solutions first. You typed in your info. So let's pull yours first. What I need is that company name again and the city and state. You might even want to copy and paste it, guys, so you can paste it back in, because again, P-E-R-I-T-U-S Solutions. And then Prosperous Solutions, where are you at? You're in San Antonio, Texas? Is that right? Prosperous. Oh, you're in Detroit, Michigan. Okay, so let's see if you're in. I have one in Texas. I have one in San Antonio, but that's not you. Is that right? Are you in Detroit, Michigan? Prosperous Solutions. Egg Drop also lets you pull up comments again. Oh, Egg Drop. Well, I don't have Egg Drop. I don't know, but I will figure that out. I appreciate that. Okay, so let me go in, and you are in. Okay, so is that you in San Antonio, or are you in San Antonio or Detroit? Just clarify that. And once you do that, then I will look this up. I looked and you immediately came up in San Antonio, but when I look in Detroit, I'm not seeing anything there. So go ahead and let me know. So you are in Michigan. Okay. So I have a Prosperous Solution in Livonia, Michigan. Is that right? On Mile Road, 316938. Guys, don't type in your company name just yet. Let's go through one at a time, because your comments I'm not able to see after you do this once. That's me. Okay. So here we go. So let's see if we could take a look here and see what's on your actual report. Let me go back here. So it's pulling up right now. So this is you right here. As you can see, here is your business name. Now, first thing to know, guys, is that all I needed was a city, state, and a company name. And for the record, people that have well-established business credit, all I actually need is a company name. And when I typed in your company name, there's one in Texas that pulled up without needing the city and state. Okay, when I come in with the city and state, this is what I'm looking at. So this indicates right here that you don't have much credit established, a lower score like this. You can see here, this is why business credit matters, guys, because Experian, DNB, and Equifax all have a recommended amount of credit that you're being recommended for. So when you're recommended, when you don't have a lot of established business credit, thank you guys very much for the love, then what happens is it affects your ability to get financing, because you see this credit limitation right here. Okay, so you can see all the information that's on a business credit report. We have the company name, we have the phone number, we have 2 different credit scores. We see that you have been on file or had your first account 9/2016. You haven't had any credit since then. Thanks, guys, for the love. It's awesome. We can see here that your score is about halfway in between. And here's the classes of risk, right? Class 1, 2, 3, 4, 5. 5 is the highest risk. 1 is the lowest risk. You're in the 3rd risk category here. A medium risk. This risk group scores by risk into ranges. Well, let's see here. Here's affecting your risk. Balances of aged commercial accounts, risk associated with the industry, low MBR of commercial accounts reported within the last 6 months, okay? So I have a net ACTA. How do I get them to report? You could call them and see if they report. You can't get them on any other report other than DMB, and DMB would charge you probably $130 or $150 a month to get them added on your DMB report. So as I mentioned, the Quill, I have Quill Amsterdam, Venture Logic. Well, this is the one that's reporting. And some of these guys might report to Equifax or DMB. We're only pulling Experian today. So Christine is on here, for example. She's got a lot of her credit on Equifax. Some of it's on DMB. You've only got one packaging account that was reported as of last month, net 30. Guys, you guys are going crazy on those hearts and love. That's awesome. And you can see here that you have zero balance. And it's a net 30 account. So this is the only account you have here. You don't have any UCC filings, no loans. You have one account and only one account. And because you only have one account, you can see here, you don't have any accounts payment past terms. You don't have any, it's all just zeros beyond this one account. So that one account and only having one account is the reason that your score is so low. So the bottom line is you need to find and get approved for more business credit, especially more business credit that reports to Experian, because you can see the limitation here is that you just do not have much credit. The result is this score is very low, medium risk here, and you're not getting approved for much. Can I use NAV? Sure. NAV doesn't report to the business credit reporting agencies as a trade line. You could definitely use them to pull your business credit. You will not see a full report like this with NAV. You'll only see a snapshot of the report and an idea of your score, but you definitely can do that. All right, who's next up? Who else wants me to take a look? And let's see what's on. Okay, whoa. Okay, Silver Grove Consulting, Portland, Oregon. Silver Grove Consulting, that's easy. Consulting. I'm chicken pecking because I have this thing in my hand, and I'm not used to being able to. I'm used to being able to come in and use both hands to type, but when I don't have both hands to type, I don't have that ability. So thanks for doing this for us. No problem, man. I'm glad to be able to do this for you. I think if you guys really want to understand the value of business credit, then I think, you know, getting a chance to see what's on your business credit report is important, and it costs a lot of money to have these things pulled. So I don't have anything. For Silver Grove Consulting in Portland, Oregon, you have no, Experian doesn't even know you exist. Houston Interest Group, wait just a second. So you can see here that we've got nothing. There are no results. Experian's extensive database does not show any records. So that means that, and is that right? Not Grove. So Silver Glove. Okay, so let's look at that. So let's look at Silver Glove Consulting in Portland, Oregon. Let's go back to the actual search bar here. Give me just a second. So Silver Glove Consulting. Let me see here. Silver Glove Consulting. And again, guys, I'm chicken pecking here with because I don't have both hands to type. So give me a second here. Okay, so you can see here, this is the difference, guys. You see how when I pull this up, that what I see is just by typing the company's name, I can automatically pull up your business. I didn't type in a state or zip code. This probably means you have a little bit more established company, or you're the only one with this name. So this is important for everybody to see, because just with a company name alone, somebody can pull your business credit, and they can report business credit with only your company name. The city and state help if I have an additional business that pops up, but in this case, only one business pops up. So as a result of only one business popping up, I can easily pull that search based on that. So you have exactly the same thing. Guys, this is going to be awesome because you can see trending here. You see how that scores within 2 points of the other? You see how this credit limitation is $1,600? What this tells me is, it tells me that you're probably dealing with a credit report with only one trade line on it. And we'll look and see if that's the case. And you can see here, there's only one trade line reported. It is a net 30 packaging account. It almost looks like the same credit report. Let me even make sure that that's not the same credit report, because it's eerily the same, but it definitely is. You can see your address, you can see the city, you can see the name, you can see your website, your phone number is all there, and you can see the same thing. You're in the medium risk class. You can see this is a little higher. You're still recommended for $1,600. We can see that you're for profit. We can see see your name, your info, the date incorporated right there. And again, you usually will also be able to see your EIN, etc., or the industry you're in, but you don't. And you only have one account reported. Now, guys, remember, you might have credit reported with Equifax. You might have credit reported with D&B. So what we're looking at here is just your Experian report. But with Experian, you only have one trade line reporting, and that one trade line is paid as agreed, but that is giving you a low score because you only have one. Now, I'll tell you what we may see here in a second as we look at more reports. A 28 or a 29 score is going to indicate somebody that has no credit, but Experian knows you exist. A score in the low 40s, like the last two we've looked at, is in a recommendation of $1,600, is clear evidence that somebody has one item reporting. So what's cool about this is that you literally can tell somebody's score and what it means just by looking at the score. I can already tell you only have one account right here. So very similar to what we looked at. Hopefully that provides you some insight. All right, go ahead. Let's go ahead. Who's next? So go ahead and type in your company name and the city and state. G. Anderson Properties, Bloomfield Hills, Michigan. G. Anderson Properties. G. Anderson Properties. And go ahead and do me a favor and type in your city again. G. Anderson Properties. Let me know if that's right. And then go ahead and type in your city and state again real quick, and I'll be able to pull this up. G. Anderson Properties. I see no search here. Bloomfield Hills, Michigan. So let me just see if I could even just pull this up. Bloomfield Hills, just by state. I'm going to see if just the state. You're not going to let me, are you? Well, I thought I would try. Bloomfield. And again, guys, I am much faster to type usually because I can use both hands. But since I'm holding the phone, I can only use one hand. G. Anderson Properties. Is that you? Right there. You can see we've got G. Anderson Properties in Southfield, Michigan. We've got another in Ann Arbor, another in Bingham's Farms. Well, that's not you. It's either one of these two. So which one? Yes, Southfield. Is this you, Southfield? Detroit. I've got Ann Arbor and I've got Southfield. These are my two options. Which are you, Southfield or Ann Arbor? And this is the actual address, and Southfield. Okay, so Southfield it is. Southfield, we take a look and we see, okay? We're spending some money today, guys, on reports. All right. My CFO will not be happy. So what this is an indicator of is this score indicates you probably only have one account, and the one account is negative. That's usually what this kind of score means. So you're definitely a medium to high risk. You've got medium risk. Hey, what's up, Mark? You've got a credit recommendation of $3,400, which means you had some credit, but more than likely that credit account is bad. You can see here that you are medium to high risk, so you are in a category 4, whereas earlier we were looking at a category 3, and let's look at and see why. And again, you could see, I guessed this just based on your score. You have one account, financial services. Guys, important to notice, when you look at your business credit reports, they do not say the name or type of company that it is. They only tell you the industry that the company is in, okay? You could see it was reported in January, and you could see the high credit amount was this. This high credit amount is why you're seeing a high amount here. Because you have more credit, you're getting more credit here. Why I'm telling you this, guys, is that understand the more business credit you get, the higher limit accounts you get, you see how this is a higher limit? The more the reporting agencies recommend for credit. So even though this account's negative, because the limit, the amount of the credit account you have is higher, that means that Experian recommends you for more money. So what we're seeing here with all of these is rule number 1, get as many business credit accounts as you can. Your score is primarily based on pay history. The more you have that are positive, the higher your score will be. Rule number 2, continue to get at the higher limit accounts you can get, which gives your credit recommendation limit up higher with Experian. You can see here, as I said, the score indicates you only have one account, which is true, and that it's negative, which is true. 12% of the time it shows you're 31 to 60 days late, and because of that small percentage of time you're late, that is really dropping your score. Plus you have a higher balance in comparison to your credit limit. So what if we look at the reason the score is this, then I bet you Experian's going to tell us at least 3 things. 1, they don't like your balance in relation to the credit limit. 2, they don't like the payment performance. 3, they don't like the limited amount of accounts you've had and the limited time that you've had these accounts. Let's see what they actually say. Number of accounts, boom, bingo. Balance, I said that would be an issue, it is. Balance of accounts in delinquent, which is the 3rd thing I told you they'd say. And the 4th thing is the balance of delinquent commercial accounts. So of the things I said they would mention, sure enough, they're telling you all of those things are contributors to the low score. So we've looked at a couple good examples here. 2 accounts that had good payment history, but only 1 account gives you a 40 score. And you can always tell if somebody has a 29, 28 score, they have no credit. And you can always tell when it's lower than 20, it's because they've got at least 1 negative account, probably only 1. Creams Lavish Credit Consultants in Orlando. Creams Lavish Credit Consultants. So let me see if I can get that one right. It'd be easier. Creams Lavish. It'd be much easier on me if you guys all pick easier names. Credit Consultants. Okay, look at that. So you can see, guys, I only pulled this much. Creams Lavish Credit. It automatically tells me Creams Lavish Credit Consultants, Orange Street, Orlando. So I'm showing you this, guys, because what's important to know is that with only part of your business name, somebody can come in here and look and see all this information about your business. So you need to know how accessible this information is to anybody that wants to have this information. So here we go. Okay, now we're getting somewhere. So you've got an 85 score, which is phenomenal. This means you pay your bills on time or as agreed, which also probably means you have more than 1 account reporting. You have a $2,100 high recommendation. That means this tells me, these 2 things alone tell me that somebody has more than 1 accounts that are paid as agreed with higher limits. Guys, I need you to understand this because this is what lenders look at. Lenders look at exactly what I'm showing you. When they're issuing you credit cards and loans, they're looking at what I'm looking at. And again, underwriters pull hundreds of these per day. So just like I'm easily able to assess what I'm looking at only based on 2 factors, your recommendation of credit and your score, underwriters can do the same thing. We see here established file 2016, date of incorporation 2016, so this is a fairly new business. You can see your low risk. You're in the category 1, which is the lowest of the 5 risk categories, which is phenomenal. We can see here they don't have enough information to determine your potential for bankruptcy, so they're throwing you in a class 2. And again, what I said was you have more than 1 account typically reporting with this score, and it's positive. Oh, we've got some other things here, so we'll see. So we can see that in this case, I'm actually inaccurate. In this case, you only have 1 account, and the account is positive, and that's giving you that score, which is phenomenal. Usually that score means you have more than 1 account, so that's good. You at least got 1 account here. You have 2, but only 1 I see is reporting. I see 1 new. I see total trades 1. Only 1 is reporting. Custom at 1 year. Okay, so give me a second here as I'll ask you guys for another company in a minute. And we can also see that we've got some inquiry, corporate linkage. They're saying you're linked to this business, which is basically the same thing. They're seeing that this business is you as well, and they're showing it as something different. Here we go. So we're seeing inquiries. You had 1 in December and you had 1 in January. So people are pulling your business credit. We didn't see this on a report yet. Okay, so far you've got 2 inquiries which don't really adversely affect your score. Let's look at IntelliScore. This is IntelliScore and how it works, right? So let's look here. We don't see, we see derogatory items utilization. We don't really see inquiries, as you can see, so don't think inquiries are going to affect score. That's why I want to show you that, because inquiries aren't affecting score here. But you did have 2 inquiries, 1 December, 1 January. These 2 businesses they're saying associated with you. Some basic information about you right here. And again, you've got 1 positive account reporting to Experian, but you paid that as agreed, which gives you a great score, which is phenomenal. So great job. Okay, so let's see who's next. Go ahead and type in your business name. We'll see if we'll pull it up. We may need your city and state. Somebody just typed theirs in. No problem, boss. Hopefully that helps you out. Hopefully that gives you some insight. Just saved you $100, so hopefully that helps you. Okay, so let's go ahead, and if you have a business name, go ahead and give it to me, and then what we'll do is we will pull that in. DM DMRS Commerce, DMRS Commerce, DMRS Commerce, and then DMRS Commerce. Are you in Jacksonville, Florida? DMRS, Jacksonville. You see how that pulled up? Only the company name. The company name pulls your business credit report. Guys, it's freaky, man. It's freaky how much information is available to anybody that wants it with as little as your business name. And this is why everybody needs to build business credit, because it's so accessible. 28. Okay, so I'm not going to tell you what's on this credit report because I already did. But tell me what you think a 28 score means. Because I kind of already told you if somebody's in the 20s what that may mean. So if you don't mind, throw in a comment here. Let's see if you guys can now, one account that could be accurate or no credit. DMSR Commerce says no credit, and that's what I'm leaning to too. So a 28 or 29 reflects that there's no accounts reporting, and this is exactly what we see. We see somebody has inquired into giving you credit. We can see you have no credit at all. No credit, no trade lines. And what I told you guys was that no credit is what equals 2829, remember? So here's what's important to note. Guys, this is a big deal. What you're seeing here is what you need to know. You can't hide from this. These reporting agencies know who you are. They get you information from utility company, from landlords. They get information, and if they know you exist, if they even know you exist, they create a profile and score. And if they know you exist and create a profile and score and you have no credit, they tank your score. They tank it. I can tell you immediately when I see a 2829 score, no credit is the outcome. They won't approve me because credit accounts as you should be. Uline, Quill, Monopolize Your Marketplace, Gimpler, Seton. These guys don't even ask you for income. They don't ask for your monthly revenue. They don't ask for your annual revenue. These sources will give you credit, guys, when you have none, and none of them even ask for what your revenue is. So a restriction for you getting credit, because when you build vendor accounts, they don't even ask about your revenue. So keeping that in mind, you can build credit through those vendor credit accounts. No problem, man. I'm here to help. So you can go to Uline, Quill, Gimpler, Seton. Uline, Quill, and Seton are the easiest. They will give you credit when you have them. They won't even ask about your business revenue. And then with those, that gives you a trade line. And as you've seen, you can jump as high as an 85 score from what we've physically seen with only one account reporting. So the difference between an 85 and a 29, the difference between an 85 and a 29, the difference between a one low-risk class to a nearly high-risk class is the difference between you not having credit and having credit. You can see you're not bad. They've actually got you in a category 3 here, whereas we've seen people with 4 and 5 with DeRogs. But again, and hopefully you guys can hear this. If you guys can't hear this, then well, that wouldn't let me know. Let me see here. Somebody said they can't hear anything. Hopefully you can hear me now. But I'm going to go ahead and click back again. If you can't hear, then let me. So, Mark, I will pull yours. Give me a second. Okay. So that being said, guys, this is what we're looking at. The bottom line is you can't hide from business credit. You have to have credit. Okay. If you don't have credit, they tank your score. They always give people 2829 with no score. Okay. And they only give you a recommended credit of 1,000. When I see $1,000 in a 2829 score, it means somebody has no credit. So you need to work on this. Look at Uline, Quill, Gimpler, Seton. We'll give it to you. Hey, Mark, I am here. Is that you? That's you, right, Mark? Mark, go ahead and type in, give me a second here. Let me look at this real quick. Yeah, I am here. Okay, so I am, okay, here. And then if I pull this up, I am here foundation. Mark, this is you, right? You're in Dallas, is that right? Go ahead and give me a yes. I'm pretty sure this is you. If not, I can probably pull you up down here as well. I am here. Let's see, I am here. Let me see if I can pull this up real quick, Mark. Okay, so pull new report. I'll pull your new report, and we will take a look at yours too as well, Mark. Okay, so Mark has some established credit. We've looked at his here on Periscope before. Mark is being recommended for 21,100, but Mark, as you can see, there's obviously some accounts that are reporting derogatory. So let's take a look and see what those accounts are. So Mark actually has some established credit here, guys, and you can see here what this looks like. So Mark, you've got one account that's reporting 20% of the time, 30 days late. It's a contracting account credit card with a high credit of $1,200 and a balance of $800. This is lowering your score. The balance is in relation to your high credit. So the reason your score is low is mostly driven by this, Mark. It's driven by your balances compared to your high credit limits. It doesn't like this. Experian does not like that these two are maxed. Experian doesn't like that all these are close to it. Man, somebody's going crazy with the loves. People are like, yeah, baby, I love that. Thank you. So this is what Experian has a problem with. They don't like these balances in relation to your limits. Your payment history is pretty good, as you can see. You've got one account that reported a little bit late. Yes, I can look at yours. Give me just a second, and I will. But it doesn't like these, and I'll show you exactly what I mean if I go into this. This is what it's going to tell us. A number of active commercial accounts. So it doesn't like the fact that you're not using all the accounts you have. But this is the biggest problem, Mark. They don't like the balances of the accounts you have compared to the limit. Number of commercial accounts with high utilization. Again, so commercial account balance 1 to 30 days delinquent. These are the main two factors, Mark, that are dragging down your score. Let's look at interior Experience and telescore again. 50 to 65% is payment and balances, Mark. This is where you're hurting. Your balances, utilization. So if we look at this, 75% of your score can relate to the payments, how you're making them, and the balances you have. 15 is utilization. So 75% of your score here has to do with the balances you have and utilization. This is why your score is going down because of those two. And then, of course, you've got one account that's derogatory, which affects part of that too. So what the key here is that you got to get these things paid down. You pay these things down, your score goes up. The score is much lower than it should be because of these balances to the high credit limits, not as necessarily the payment history. You got so many positive pay. The positive pay is offsetting the negative pay. But you're struggling here because of these. The balance is the limit. The balance is the limit. The balance is the limit. Not so 0, 0, a little bit of available credit and a lot of available credit, but that's what's dragging down the score. Okay, so that being said, I have enough battery life here probably for us to look at 2 more reports. So let's go ahead and type in your company name and the city, D&L Investment Group in Inglewood. D&L Investment Group in Clipper, you will be my last. D&L Investment Group in Inglewood. D&L Investment Group. Let's see if it pulled anything up here. In Inglewood. Only your company name. Help me pull this up. And I got one more after this, guys, and then I'm going to run out of battery because these live streams crush my battery. Okay, so I'm going to go ahead and do one more after this, and then we will be okay. So your 71 score, which is good. Okay, guys, so what have we learned so far? What we've learned is this. This is really low risk, man. That's really awesome. So there's a few things I can learn by this. First of all, we've got a company here that has multitude of credit accounts reporting, and they're paying the bills as agreed. They've got some high credit limits, which is why Experian is reporting such a high score. The bankruptcy score is very low, which means they have to have some kind of financial data, which means you've definitely been on their record for more than a year because they have your financials and they like your financials, which is part of why they're saying that. You're fairly low risk score here. You're very low risk score here. You're almost perfect on financial risk. And then let's look and see the account. So here we go. And this is exactly what I said. Multiple accounts. I was turned down for Southwest Airline credit card backed by Chase Bank. Well, that's probably because do they pull your personal credit? And if you have personal credit issues, that's the problem. The problem is you don't have enough trade lines to you need 10 trade lines to apply for that credit card without giving them your personal credit. So that being said, we see high limits, which is why this is what I need you guys to see. Gosh, please, please, please understand the value of what I'm telling you here. Please, I beg you to understand the value of what I'm telling you here. This person has done the right thing and built business credit accounts. Started with low ones like this and this one, moved up to these. now is up to these, okay? Let me show you why this matters. This is why Experian is recommending him for nearly $10,000. You see the correlation, guys? Look, he's got a $10,000 high credit card, so Experian is giving him nearly a $10,000 credit recommendation. So here's how you build business credit. You get starter vendor credit accounts that are smaller limits. Then you move up to these kind of store type of accounts. Christine says, I have trade line reporting on my business upscale stables and not mine either. Okay, so you know how to dispute that, Christine. Once you do this, they establish a credit score and profile. Your score is high. You've seen, guys, 85 score with only one account reporting. You get a high score because you pay these small accounts as agreed. Then, whammo. They start giving you high limit. You never see this with consumer credit. Consumer credit steps up. $100, then a $500, then $1,000, then a $2,000, then a $3,000, then a $10,000. Not how business credit works, guys. This is why I love business credit. You start with cheap accounts, Uline Quill, $100. Then you start to make rapid jumps up, $1,000, rapid jump, $4,000, rapid jump, $10,000. This is how business credit works. So let's go to the whiteboard. So step one, you get these guys, $100 to $500 limit accounts. Step two, these guys, stores, start to give you $2,000 to $10,000 accounts. Then you start to get the same kind of credit with fleet and cash credit. Let's look at some real approvals. We just looked at Mark's credit report. He started with these guys, small accounts, right? Small accounts. Then he starts to jump big time to $4,500, $3,500, $75, okay? So this is how this works, and I just showed you on Real Business Credit Report. You are the truth. I appreciate that. It means a lot. This is cool because we get to combine three things. I'm showing you the process here. You get Uline Quill, these guys for small amounts. That gives you a trade lines report and score. Then you jump to these guys with high approval limits. Then you get fleet and cash credit that mimics those approval limits. I'll show you how it looks in real approvals. Mark, who's on with us today, let us pull his credit. He comes in and gets these small accounts. Then, because these give him a credit profile and score, 500, 800, 500, whammo, 7,500. Huge jump, guys. There's no in between here. He immediately jumps to these high limits. Let's look at Christine, that's a little bit more advanced. She comes in and starts getting these accounts, and then whammo, 15,000, 16,000, 12,500. So she went from $5,000 and $8,000 approvals. This is 4,000 a week. So this is 16,000 a month, 15,000 a month, 15, 20. What's the next step? Does she go from 20 to 25? Nope. Whammo. 40,000 Best Buy, 40,000 fleet credit. Here's how real business credit works. This is why you guys should love it. You start with small accounts, whammo. You make the jump to big accounts. Then as you start to get approved for these big accounts, 5,000, 8,000, whammo. Now we're at 15,000, 20,000 approvals. Once you're here, we don't start stepping up like we do consumer credit. Whammo, 40,000 approvals. That's how business credit really works. And here it is on a credit report. Small account, whammo, 3,600, whammo again, 10 grand. The next approvals that follow this are $20,000 approvals. That is truth, guys. That's how it works. From a whiteboard to real approvals to an actual business credit report. We can also see here corporate linkage, a couple inquiries, giftware, and whatever that is, computers back in November. You're doing a great job, man. Good job with this. Good job with this. Keep up what you're doing. You're doing a great job. The only thing I would recommend that you do better is continue to get more accounts and pay off this little $100 utility, because that is affecting your score more than it should. We got turned down with Ford. Need huge down payment. We'll be trying to get in. Good job, Christine. Keep it up. One more. I told you I had one more reserved, and I told the person that I would pull theirs. So whoever that person was, SWFL Clipper in Cape Coral. SWFL Clipper in Cape Coral. Here you go. See how that? Only business name, guys. I get the address, I pull it up. This will be my final one because my battery will not last anymore. These live streams just crush my battery. So here we go. And then again, you guys are now experts. So we can tell by a 51 and a $3,000 limit, we've got somebody here with credit but either limits are high in relation to balances, or balances are high in relation to limits, or derogatory. Okay, so that's what we see right here. 51, you're middle of the road when it comes to risk. You're literally right at the middle of the road here. And again, let's go down and let's look and see what we see. We see more than one account, good. We see higher limit, 500 bucks. Okay, we see current at 100%, so you're current. But here's the problem. Like I said, they don't like your balance in relation to your credit limit. You're maxed out on these two accounts is what they're showing, 2 of 3. But I want to show you guys something. It's very important that you see this. $500 balance, a $500 credit limit is the highest this person has. Are we agreed? $500. And look at how much they're being recommended for in credit. $3,000. So you're getting higher recommendations for credit the higher it goes. And this is why those higher limit accounts follow. Great job on this. Great job. You just need to pay down and keep your balances at 0 as much as you can, because this balance to credit limit is what's killing you, and I'll show you right here what that means. Here's from Experian themselves. Ratio of balance to high credit limit. They don't like it. The average age, I like this personally myself because it means you're pretty new to building business credit, already have a few accounts. Balance, balance. Balance, balance, balance. 3 of the 4 reasons they don't like this score has to do with your balance in relation to your limits. That's it. So I'm going to wrap this up because I don't have much battery juice left. But we got a lot of opportunity today. I don't know how many business credit reports we looked at, but we looked at a lot. Hey, there was nobody on the planet as awesome as you. Thanks, man. That's awesome. Like, I'm the most awesome person on the planet. That's awfully cool of you to say. That's really cool of you to say. So 1, 2, 3, 4, 5, 6, 7, 8. Okay, my team will not be happy because I spent a bunch of money today, but that's okay. We looked at 8 credit reports today, and we saw it all, didn't we? We saw people with no credit that had bad scores. We saw people that had no record that we couldn't even pull up, but then I think we actually were able to pull that up. We saw people that had only one account negative and what that did. We saw people with positive accounts that are new with an 85 score being recommended for thousands of dollars. We've seen people recommended for tens of thousands of dollars with balances even close to their limits just because they got higher limit accounts. We also saw that people were able to come in and get approved for high amounts of credit without having really high limits because they have a multitude of accounts. We also saw, most importantly, anybody can pull your business credit report with only your business name and look at all this information about you that you probably hope, some of which would be private. So now you learned a lot. Now we're going to dive in the weeks to come and talk more about this business credit building process. We're going to combine with real approvals back here, the whiteboard here and credit reports, and I'm going to walk you through this whole process again to build business credit. Remember, if you'd ever like to work with us to build business credit, this week we have what's called a social media special going on. You can go to our Facebook page. Flowers, which is cool. And you can go to the website creditsuite.com/special 4. We've got a 30% off price a special going on right now, creditsuite.com/special 4. And you can go to, but let me tell you a little bit of a surprise. And I don't want to let this out of the bag too early, but I'm going to. We are this close to reporting enrollments and payments that our clients make to Experian. As a matter of fact, we are preparing the first batch to go to Experian. So probably by the end of the month, our first batch will be reported March 1, which means when you're enrolling with us and paying $2,500 to $5,000 plus whatever package you're enrolling with, we report that as trade lines on your Experian credit report. And as you guys have seen, the higher limits mean they recommend you for higher amounts of credit and help you get even higher limit accounts. We're going to help expedite that process by now helping our customers report payments to Experian. I don't want to talk too soon because it's not finalized yet, but it's going to happen very soon. So anybody that's enrolling with us anytime soon, even if you enroll before that happens, those payments will still be reported. It's going to help you guys get a trade line just by working with us. Remember, it's just as cheap, if not cheaper, to work with us than pay for it on your own, because we're giving you Experian Smart Business Access at no cost, 411 at no cost, and we're helping you get set up with DMB at no cost too. And don't forget, you don't have to work with us. You can go to creditsuite.com creditsuite.com. At the top right of the page, we have all of our social media channels. We give you all kinds of tips to help you build business credit, and you will be successful if you follow our tips, as a lot of people will tell you. But if you work with us, we just take what might take you a years or a longer period of time, and we just condense it. We just get it done in months. All these approvals that we looked at here for Christine, of ours, these are the approvals she started to get within 90 days. So we just expedite the process. But even if you want to do it on your own, just go to creditsuite.com/consult and schedule time to talk with us more if you want in on the special, want to learn more. Or just go to creditsuite.com, top right of the page, to access our social media. And don't forget, you can also text 855-982-1820 to get emails from us and to get text tips from us. You can also go to creditsuite.com/Periscope for a great free guide on building business credit. It's been a long scope. I hope everybody enjoyed this. Peace out. Love you guys. Thanks for following. Thanks for sharing. Thanks for loving. I'll see you next Wednesday at 4 o'clock as we come back on Periscope and start diving back in to decoding the process of building your business credit. Thanks, everybody. Have a great day.